Good afternoon, guys. It's Workin, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. Starting off with the weekly chart, guys. I wanted to point out that we're now on 8 weeks of a green candle on the weekly chart, guys. That is obviously that is a great great win for the bulls, guys. This is very, very bullish looking. That being said, guys, price can only go up for so long before you get a pullback. Again, we're talking probability. Nothing has to happen in this space at all. This thing could just take off to the moon. Yeah, we've seen it happen in the past, guys. But probability-wise, we're looking at, again, 8 weeks of green candle so far. We're on the 8th week now. And probability-wise, we are going to see a pullback either this week or the next. Looking at looking back in history here, we're looking at Bitstamp, and I pulled up Bitstamp because they do have quite a bit of a history compared to Coinbase and some others. But looking back in here, guys, I mean, let's look at look at this bull run here. I mean, the major bull run here, we went 1, 2, 3, 4, 5 weeks, maybe 6 weeks here before we had a major pullback here. Looking at this little uptrend here, we went 1, 2, 3, 4, 5, 6, 7 weeks, and then we had that severe pullback from 7,600 back down to almost 5,000, 5,500. Here was 6 weeks. Coming back here to April of 2017, 1, 2, 3, 4, 5, 6, 7, 8, 8 weeks here, going back to April. So we can see that you're right on that line, guys, to where even in the most bullish runs here, we've had a pullback right at that 8-9 week mark, and we're reaching that 8 to 9 week mark. And the last time we went beyond that, the last time we had 9 weeks plus of green candle on the weekly chart was all the way back in the beginning of 2013. Going all the way back to this run in 2013, guys. This January of 2013 was the start, and I think we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 weeks of green, of green candles. Looking at the weekly there. So again, guys, just looking pure probability-wise, we are going to be looking for a pullback here in the very near future. I would say in the next, this week or next week. Now, when that pullback happens, how far is price going to pull back? Well, I think it's going to pull back to, very likely, if you look at the beginning of this order structure here, and again, we're zoomed all the way out on the weekly, but if you look at this order structure since this breakdown here, our major breakdown here, we can see that the top of resistance starts here. That was the first wick. Top of the resistance starts there, and the bottom of resistance goes right to about 41.20, right around there, guys. So I think the pullback is going to be somewhere between maybe 4,500 down to about 4120-ish, 4100. Call it that zone. That's somewhere in there. Probably, again, just pure probability-wise, guys. Doesn't mean it has to happen, but just probability-wise, I do think that's going to be the area to look for a pullback to, and that's also going to be the area, in my opinion, not financial advice, to possibly pick up a little bit to add to your position if you're not already into BTC, or add a new position into BC, somewhere between 4,500 and 4,100, guys. Laddering in buys, that's where my buy orders are laddered, and that's where in my opinion, that's where it would make sense to ladder in and look for a bounce if we do have a pullback. That being said, guys, we're seeing a lot of even if we have a pullback here, guys, overall, as I said on my last update, this is an extremely bullish move. The next major hurdle we're going to have to get past, we've gotten past so many, but the next major hurdle that we're going to have to get past is breaking past this golden pocket. As I pointed out on my last one, I won't go into too much detail. I'd encourage you to watch my last update if you want to understand this a little bit more. But yeah, getting past this golden pocket between the 618 and the 65 fib level is going to be a key area to get through. And I do think we're seeing some very positive signs to where we may, even before we get that retracement, we may, and I want to emphasize may, we may see it push up to the $6,000 area before we see a retrace here. If I come over here and I look at the RSI, let me pull up. This is again on the weekly. Looking at the weekly RSI, guys, we can see we've broken through major resistance. We can see that this area was acting as support right at around 53 RSI on the weekly, was acting as support basically all throughout 2016, 2017, until it finally broke down here at the beginning of 2018, and then what was support started acting as resistance. We've just recently broken back above that area, guys. So again, another very bullish sign. Even if we have a little bit of a retrace, I'd be watching for a possible retrace down to that 53 area, and for that to start acting as support here on this weekly RSI. But zooming all the way in on the daily, guys, we can see, we can start to see we're finding resistance. Obviously, I pointed out that this is the 618 fib level, between the 618 and the 65 fib level, that golden pocket right here. Also, that was the area of support when price broke down here. That was kind of the bull's last stand. So it's no coincidence that it's also acting as resistance as we move up here. That is very expected. But if we zoom in here, guys, and look at this structure here on the daily, this is we're creating a series of higher lows here without question, guys. That's a rather bullish sign, and we're waiting for a pattern to kind of develop here. And if I zoom in even further here on the 4-hour chart, guys, we can see what looks like maybe what it looks like may be developing here is also a rather bullish sign, guys. If I kind of pull over here and there we go. We can see that we just retested this prior high right here at approximately 53.50, somewhere thereabouts, 53.47-ish, somewhere thereabouts. But we just retested that prior high, pretty much almost to the dollar. In fact, if I come over here and look at it, it was, let's see, the high was, let's see, what was the high? 53.45 was the high here, and coming over to the high here, we were at 53.52. Again, we're looking at Coinbase. So yeah, I mean, within a few dollars of each other, basically retesting this high here. So if I kind of take my little line here and I draw it across here, what does this look like we're creating? Again, we've only really tested the bottom here once. I mean, maybe making an argument for 3 times, and we've tested the top here twice now. Or excuse me, we tested the bottom here twice. Maybe make an argument for 3 times, but really twice, and tested the top here twice now. Now, I usually like to get at least 3 tests before I can call it a ascending support or a resistance area. I want to see it tested 3 times. We haven't quite had that yet. That being said, I can't ignore the fact that this is looking more and more like an ascending triangle. And if that is the case, guys, we may end up breaking up here. And that's why I was saying, guys, before we break back down, before we have that retracement, that is inevitable at some point. At some point, we're going to have that retracement, guys. But before that happens, just looking at this pattern here, guys, this does look like we may get a break to the upside. Again, I'm not 100% sold quite yet, and if it does break up, I do think we're going to find obvious resistance in the area that was extremely strong support, right at that $6,000 area. What was support should act as resistance. So somewhere between 5,800 and 6,000, guys, we should get a decent rejection. Now the question is, are we going to break up here and then break down massively, or is it going to break up here and kind of consolidate right around that $6,000 area? That's, we're going to have to wait and see kind of how this ends up playing out, guys. But at some point, I do think we're going to get that correction. The question is, are we going to break up first, or is this thing just going to go ahead and correct and break down? And looking at this pattern right here, this does look rather bullish here. Now again, this is a little bit sloppy. I don't even really want to label this an ascending triangle just yet. Just because it's only been tested twice on top, twice on bottom. But that being said, there's no question it kind of is looking that way. That being said, zooming out here to the daily chart, guys, and looking at our indicators, especially looking at this daily RSI is still extremely overbought, still sitting at approximately 87. The last time we've seen it sit up here for as long as it has right now, the last time we saw it sit up here for that long was all the way back here in May of 2017. So, this is really screaming for a correction here. Again, doesn't mean we can't see a little more upside before we get that, but at some point we are going to get that correction. It's just a matter of, is it going to break up first? Now, looking back at the daily, guys, there's a lesson to be learned here. A lot of people were thinking that this thing was going to end up breaking down. That was obvious with looking at shorts as well. And the fact that there were still some bears that remained in this market and everybody isn't FOMOing in here, guys, I do think that is part of the reason that we might see a break up here to that $6,000 range. In other words, everybody isn't FOMOing in just yet. And so there's still some rationale in the market. And that would tell me that maybe, just maybe, we may see a break to the upside. And of course, this possible ascending triangle that's forming here would also suggest that. But yeah, market sentiment is not, even though everyone's saying, that, certainly interest is spiked. There's no question. But there's enough analysts in the market that is very skeptical. myself included, very skeptical of this latest move. That until everybody turns bullish, there's a good chance that we may get some rational moves here. We may get another push up here to that $6,000 range. And the fact that we've been able to consolidate just under this area of support here, just above $5,000, again, that without correcting here, without a major correction, is a rather bullish sign, guys. So again, I'm starting to lean towards a possible push up to that 6,000, but eventually, as I said, guys, we are going to get that major correction right back down. Now, an interesting thing, guys, and I want to point this out, whenever you're setting your stop loss, a lot of people, they set their stop loss based on the prior high. And I'm going to show you, so we came back up here, and obviously price came back up and just earlier today retested this prior high of this wick when it finally came up here, tested this prior high here. And everybody had their stop losses. Everybody that went short, in other words, obviously when you're going short, you're setting your stop loss, higher. That's just, obviously that's what, for those new to trading. I know, forgive me for those of you that are, for you trading veterans, but for those new to trading, you're going to set your stop loss a little bit higher when you're going short. In other words, going short, you're expecting price to end up breaking down. Everybody that was going short set their stop loss right. Not everybody. A lot of people set their stop losses right here. Never do that. You always want to set. So if you're going to go long, in other words, it would have made sense to put your stop loss. A lot of people would have put their stop loss at this wick down here. Again, never do that. What you want to do, guys, is you don't want to do what the crowd is going to do. So if you expect this thing to end up breaking down and you're planning that and you're taking out a short position, instead of setting your stop loss where everybody else is, which is going to be right here at 53.57 or 53.47, which is this prior high, set it just above that at at approximately 53.80. $20-$30 above that. Just a tiny amount just above that. Just not right on that prior high, because everyone else is doing it, and I'm going to show you why. If we come over here and we look at we look at shorts, what happened? As soon as that prior high was hit, shorts just got liquidated. So everybody had their stop losses set right there at that prior high, as is evident by this major drop in shorts. In fact, if I come over here and measure this was a drop of 27%. A 27% drop in shorts inside of 4 hours. That is, that clearly everybody had their stop losses in the same place, set right here. So rather than, and again, I'm not even saying to go short here. I'm just saying that if you were going to go short, why not put your stop loss above, maybe $20-$30 above? You're not really risking that much more money to make any difference at all. And it could be, rather than getting, and if a market maker is trying to go on a stop hunt, they're going to push price right up to that prior wick, knowing that retail is putting their stop losses right there. And again, obviously they were. So rather than doing that, you're not risking that much more to put it $20-$30, just $20-$30 above that zone, guys. You're really not risking much more, and it could keep you in that trade. And if we do end up breaking down right here, guys, you'd want to still be in that trade. Now, again, this thing could break up. I'm not telling you to go short. I'm just saying it doesn't make sense to get out when everybody else does, when you could put your stop loss just prior above that and protect yourself from that stop hunt that market makers often do. All right, that's kind of a side note. Again, I'm not saying that you should be going short here. In fact, I do see a scenario where price breaks up here to that $6,000 range. It's just kind of it was a teachable moment, and I didn't want to pass up that teachable moment. All right, so getting back to technical analysis, looking at our longs. Longs are slowly starting to stack here. Shorts obviously dropped off the board in the last 8 hours. There's a little bit of a climb here, but major liquidation of shorts. The spread between longs and shorts here is fairly significant. Now, typically, I would tell you, anytime you're seeing longs stacked, especially compared to shorts, what are you going to do? You expect market makers to want to what? They want to liquidate those long positions. How do you liquidate longs? You'd expect them to drive price down. And that's typically what I would tell you, but I do think if we especially if we come over here, we look at longs, and I kind of zoom out a little bit here, we start to get some perspective, and we can start to see there's, especially when looking at where longs were, there's still a lot of room for longs to rise here, and I would not be surprised if market makers want to trap people into their long positions even more than they are now, because longs, yes, longs have risen here in the last in the last day, in the last 12 hours or so. Yes, longs have risen here fairly substantially, but not really all that substantially. In other words, there's a lot of room for market makers for price to go up. And I do think if I'm thinking about this from a market maker standpoint, it might make more sense to allow price to jump up here to that $6,000 range. Try to get rid of some of those bears. In other words, try to get long positions to just continue to stack here more and more. Shorts drop off the board, and then take out all those long positions up higher up here. So in other words, baiting longs into him for the trying to feed on that on all that interest and on that pent up bullish momentum, because even the bears in this market want to be bullish. Even the bears, you know, and I don't mean the guys that make all their money on shorts, but even the guys that are skeptical, sitting on the sidelines saying, I'm just not sure, they want this to be bullish. They want this to be the bull run that everybody is waiting for. And if we and a spike up to 6,000 is going to get them to finally enter into that market, a lot of them anyway, to finally enter into that market, and would certainly be a lot more profitable for market makers to liquidate those positions up here. Now, they're playing a big game. If they do end up bringing price up to 6,000 and everybody ends up FOMOing in, they could just blow the lid off this thing. So it's certainly a risky game they're playing if that is in fact their strategy. And this is total speculation on my part, guys. Total speculation. I could be completely off on this. But I wouldn't be surprised to see them allow price to spike up here, drive price up here to that $6,000 range, allow those longs to stack even more, and then just liquidate those positions, and then drop price down here to that for that retracement that we all know is eventually coming down to that $4,500, maybe even $4,200 area. Again, not saying that's going to happen, guys. I'm just looking at this from a logical point of view, and again, from my personal opinion, not financial advice, that would make a whole lot of sense. How am I playing this? I don't think this is a good time to either get in or get out. I think this is a good time to hold wherever you are. Even if you're in a short, I would hold. If you're in a if you entered excuse me, guys. If you went short up here, I'd just kind of hold on to that position, have your stop loss just above this prior wick, as we talked about earlier. If you're long into this position, guys, if you went long down here, you know, maybe increase your stop loss a little bit so you're going to be in profit either way, or at least break even. But I personally, I wouldn't add or take. I would just wait and see how this ends up playing out, because we could easily see a spike up to 6,000. We could easily see a drop down to 4,500. Again, I know that's frustrating to hear from an analyst. It could go up, could go down. That's brilliant. But I do think that that's the point that we're at. So I would just hold and wait for confirmation. If you're looking to short, I'd be looking for a short somewhere around 6,000, 5,900 to 6,000. If you're looking to go long, I'd be looking to enter a long position somewhere around 4,500 all the way down to around 4,200, or excuse me, 4,100. But other than that, guys, I would just hold and wait for the market to play out. So I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourselves. This is Workin.